Thank you, Lakshmi. Hello, everybody. Trust you're enjoying being part of Finacle Conclave so far. Welcome to this session. I am Sajid Vijaykumar, Chief Operating Officer, Infosys Finacle, and I have the privilege of moderating this discussion today. To set the context, customer engagement, the cornerstone for business growth, is saddled with technology silos and manual processes, leading to fragmented and inconsistent journeys across the customer lifecycle. With evolving customer expectations, technological disruptions, and new competitors, elevating customer engagements has become a strategic focus for financial institutions. The COVID-19 pandemic has also significantly accelerated the pace of digital adoption. In today's session, I will discuss how leading banks have cracked the code and are redesigning and maximizing customer engagement in the new normal to drive purposeful growth. And for this, it is my pleasure to introduce to you our eminent group of panelists for today. Adrian Vermooten, Chief Innovation Officer, Standard Bank. Kaspar Situmorang, Executive Vice President and Head Digital Bank, BRI. Shankarsan Banerjee, Chief Information Officer, RBL Bank. Gentlemen, thank you for making the time to participate in this panel discussion. My first question is to Shanky. With the pandemic, a new wave of digital disruption, more forceful and more pervasive than what we have seen in the recent past, will likely unfold in the next decade. Can you please talk us about how the pandemic disrupted your bank's business? What measures did your bank take to support the customer during the pandemic? How will you think the situation will pan out in 2021?
Thanks, Ajit, for inviting me on the panel, and I'm very excited to be here. The pandemic did, of course, change life a lot for banks. And more so because, one, it was unexpected. Secondly, the scale was difficult for us to understand when it started. We started by thinking it'll be a temporary, maybe a 1 month disruption to our operations. And, it'll be a few people who won't be able to come to our branches. And then it went down into wholesale lockdown for months on end. And that changed behavior in a few major ways. Initially, our focus was on making our employees productive because they were not allowed to come to branches. Then the focus shifted on how to make our customers productive. There was a big drop in customer transactions initially as people stayed at home and did not buy things, did not take loans, did not do all the standard financial activities or financial related activities that you would expect. Then we started worrying much more about, because customers started doing retail activities, initially slowly and then actually quite in high volumes. We saw volumes on digital transactions and transactions overall grow in the pandemic. We are in fact a little bit higher than pre-pandemic levels at the moment. Where we saw challenges was businesses, of course, especially small and medium businesses, which is a very big target market for banks, for us and for many other banks. That had a very severe challenge. Many of them were locked down with zero business activity for months on end. And there were a lot of regulatory and other changes required to keep track of how to work with them. So moratorium is a good example. Moratorium, it seems straightforward to say stop charging interest, but there are lots and lots of implications to it, given the variety of loans that businesses take and the variety of payment options they have. And also the sub implications, interest on interest, when does it start, when does it end, what happens to a defaulter, what happens to somebody who's halfway through a default, a suspected defaulter or a potential defaulter. Those challenges became quite large and we had to do them at very short notice. We had to do them without being able to simulate. In a normal bank, I would have simulated this for 3-4 months before running such a program. Here, I did not have that luxury. So a lot of it was, in the second wave, was handling these issues. Now that my customers are behaving very differently, how do I handle the business flows attached to them? Both personal loan repayments, credit card repayments, and so on, and SME in particular. Large businesses were less of a problem. The third round was, as we started, getting a handle of that, was that customer behavior now started becoming far more digital. But digital, not just in, they started using our banking interface. They also started using digital channels which fuel transactions into our bank.
Mm.
And this was true of retail, individual customers. This was true of SMEs because many SMEs opened up. They started becoming online businesses.
Mhm.
For instance, RBL Bank is a big lender to restaurant chains.
Mm.
3 months they were shut. Then they said, we will become online. So now they became heavily online, and their transactions, therefore, what used to go through a POS machine, now started going through digital channels. There were many other such changes, and our digital volumes changed. The requirement of reliability on the digital volumes changed quite dramatically because the earlier assumption used to be that digital is the primary mode, but if it fails, you can always go back and swipe a card. Now that become a challenge. You can't really swipe a card. It has to be digital, or you can't take cash anymore. And so the urgency of the quality of digital channel suddenly became much higher. And in the same time frame, RBI also implemented 24 by 7 NEFT, 24 by 7 RTGS. So that was the third phase where we encountered different demands on our digital channel. And I would say three kinds of demands:
Mm.
volume and reliability demands, the fact that many of these channels were no longer directly our own channels. They were not necessarily transacting through my mobile banking interface. They were transacting through Zomato's or Swiggy's banking interface or M-Swipe or many of the others. And the third challenge was that many of the facilities, digital banking facilities that government started opening up, started formulating new business models. People started making use of 24 by 7 NEFT to do different things. And this all happened in the last few months. So we started seeing new business flows or new kinds of business flows that earlier did not quite exist. And because we're a very large banking as a service provider, we aggressively quoted and started enabling many of these business flows. So that provided a totally different flow or flavor to our digital banking.
Thank you, Shanky. Wonderful insights, and these are truly trying times. And then we as leaders need to really figure out the best way to engage with our customer. Thank you for sharing your experiences. Right, Kaspar, my next question is for you.
Yep.
Customer engagement is emerging to be a predominant brand differentiator and an indispensable investment priority for organizations around the world. What has your bank's experience been, specifically in the context of Indonesian economy? We would like to hear your views on what strategies have been worked out by your bank to better your engagements with your clients in such dynamic times.
As the largest bank in Indonesia, BRI assumed its responsibility and has proven capacity as a development agent and as a financial intermediary institutions throughout the nations. So our strategy during this pandemic is selective growth. And because this is still in the survival mode, we still focus on business follows stimulus. So we are the biggest and the largest also distributors to fasten up the transmissions of stimulus to reach millions of Indonesian people. And at the same time, we help the MSME sectors to back again as become our backbone in Indonesia economy. As you've already known, 60% of nation's GDP is coming from the MSMEs, and 97% of the domestic workforce is coming from the MSMEs. So MSMEs' key roles to the nation's economic development is really, really huge. And BRI ceaselessly provide mentoring, financial access, and also financing to the MSME communities as we speak. And ever since the pandemic's era, we've accelerated our digital transformations, initiatives, and strategy, not only from digitizing our core banking products, but also our super apps transactions has been increased up to 1,000%, both in transactions and new active users. So building a digital ecosystems to offer our products and our open ecosystems and open APIs, we end up with maximizing our profits, but also at the same time, we try to limit the cost properly and better than before. So even amidst the pandemic, BRI are still able to generate profits in the last third quarter of 2020 for about $1 million of US dollar. And hopefully this year we can push back again all of the initiatives that we already designed by selective growth in the survival mode, and also with the business follow stimulus, we hope that we could reach out more and more customers in this pandemic era through digitals. That will be our strategy. Sanjit, back to you.
Thank you, Kaspar. My next question is for you, Adrian. The pandemic has clearly helped accelerate digital usage, and deeper customer engagements have only become more relevant. What, according to you, should banks consider doing to be able to deliver full impact across the customer lifecycle?
Thanks, Sajid. I think one has to really start with the conviction of being more than a bank. Because in these times, being a bank is not sufficient. Our customers expect a lot more from us, because they're trying to solve much more complex problems than they were pre-COVID. So if I use an example, a simple example about really creating deep digital customer engagements, I want to use something like a simple card payment, swiping a card, etc. But now during COVID, and obviously in Standard Bank is the largest bank across the continent of Africa, we experienced COVID at different levels of lockdown in different countries at different times. But you started to identify common patterns. And let me use a payments example, and Sankey definitely spoke about it, people coming in through different channels, not your own channels, etc. But let's take the license disc on the windscreen of your car or motorbike. In many of our countries, this needs to be renewed annually. Now, your license, traditionally you would have gone to the post office or to the licensing office and submitted your paper, and you would swipe your card and you would make a payment. How do you do that for your customer during COVID? And your customer expects you as the bank to solve that for them. Now, during COVID, first of all, there's lockdown, so you can't go out. 2 is, your license disc has now expired on the car and you're worried about getting a fine or an offense or penalty points. 3 is, the license office is an essential service, so it is open, but its staff are affected by COVID, so the queues are long. And now suddenly you have even increased social distancing risks, etc., because you must go and queue for hours to get your new license disc. How do we as a bank solve for that? Because the customer expects us to solve for it. And things like working with partners to say, yeah, let's solve it. Let's enable our customer to take their app and take a picture of the disc in the windscreen of their car and take a picture of themselves and their identity to confirm who they are. And let's package that along with an instant payment to the license back office or to their systems, and through robotics, let's process that and let's get it back. Let's get the new license disc back to the customer. So my example, Sajid, is that you have to, during these times, to be digitally effective and to have deep engagement with your customers, one has to show up as so much more than a bank. And in order to do that, one has to really understand what are the jobs that our customers are trying to do in a new way. They used to go to the license office or the post office to renew it. Now they can't. So how do we solve for that? And that's been really one of our most exciting and I want to say fulfilling experiences during COVID, is this ability to deeply understand what matters to the customer now, because it's different from what it was a year ago, and adapt our digital channels for that.
Very, very insightful. I mean, amazing, right? While on this topic, it would be good to understand how different capabilities are being considered by financial institutions in the context of customer relationship lifecycle, especially onboard, serve, engage, and sell better. Let's start with onboard now. Right? We all know first impressions matter. Can you share with us what Bank BRI is doing in this space to ensure customers have a flawless digital onboarding experience? Can you take us through some of the key initiatives undertaken by the bank to achieve this? Kaspar, you like to throw us some light on that?
Sajid, these are very good questions, and I'd really love to answer this one because we've made a really majestic approach and onboarding for the past 3 years at Bank Rakyat Indonesia. Before 2018, the way we do loan originations to loan disbursement, it took about 2 weeks because it's still pen and paper. But since 2018 onwards, it took about less than 2 days to do loan originations, to do loan disbursements. And in 2019, we are able to accelerate it 100x since 2018. It becomes just less than 2 minutes. So the loan disbursements right now, so basically it's just scan the face, scan the ID, that's it. The machine learning do the underwriting and decide whether we provide the money to you or not. So that is our biggest achievement, I think, so far. For the past 3 years, we are able to accelerate the loan disbursement with a very high precisions and low non-performing loan. And by doing that, we are able to now scale up to the next level, because the next strategy is not only providing that on our own apps, but we are able to make it more scalable by providing the API of our digital lending to more bigger scale, meaning whoever the platform on the front ends, they can apply to our digital loans through those APIs and have the fast and also precise decision engines with our own machines. So that is something that we are able to share to you today. And the second part, of course, is the, people say data is the new oil, but as we've already know, you need to provide the pipeline. Don't forget to build the pipe. So that's what exactly we've been doing since 2018. We've been the first bank in Indonesia who has our own open API since 2018. And ever since then, we got the PADSS, PCI DSS is for cards. The PADSS is for API and softwares. So we are the only bank in Indonesia who got the PADSS certified for our open API. And we got also the ISO 27001 for our open API in Indonesia. And the growth is amazing. In 2018, the growth is, until today, is 290% growth year on year. So we are able to score up to 25 billion US dollar year on year since 2019 to 2020. So in order to be exact, I think the speed is also one of our proud achievement, because before 2018, in order to be able to partner with our bank, it took about 2 months in order to just attach one host to host, they call it at that time. Since 2018 onwards, now everything attached through APIs, through our open API. So you don't have to meet with the IT guys, just connect, register, get the token and key, that's it. It's like electricity, you just turn on the switch, that's it. The transaction flow, the money flow, all of our services can be consumed by all of our customer B2B. And this is the starting points of our B2B2C businesses, which increments like crazies. And we keep finding a new avenue, new services to be able to put into our open banking. And last but not least, I think this all can be done because Our system is also backed up with our AI and big data platform. So BRI has an unfair advantage from our large amount of data that leads us to create by the name of BRI Brain. So BRI Brain is the biggest neural network in the world for the microfinance sectors. So throughout our innovative approach to utilize AI and big data, BRI Brains enables us to enhance our credit scoring, fraud detections, and also merchant assessments to be able to do in a fast amount of time, I think. So this also strengthens our effort to boost financial inclusions throughout Indonesia. As you already know, our bank is not only designed just to make profit, but we are a state-owned enterprise, so we have to give back to the community, give back to the Indonesian people. So by using digitals and AI, we believe we are able to not only to emphasize the economic inclusions, but also to boost financial inclusions throughout Indonesia in 2021. That will be our answer for this question, Sanjit. Back to you.
Thank you. Thank you. And my favorite is 2 weeks to 2 minutes, right? It is as if we had to have this pandemic to innovate better.
Thank you.
Customers today, my next question is for Adrian. And customers today expect superior banking services anytime, anywhere. How do you think banks today can drive meaningful empowerment of their banking services across channels, including branches, and still be able to create cost-effective combination that is adapted to the bank's customer base and the market strategies? Adrian?
Thanks, Sajid. And it goes so nicely with what Kaspar was saying around the work that BRI has been doing, because I think that the focus really needs to be around less thinking about the channel and more thinking around solving the digital experience for the consumer. Because when you solve the digital experience for the consumer, it may land on a multiple variety of channels. Some of those channels are not even your own, as you talk about open banking and being third-party channels, etc. So one of the first things, and I think there was a lot of work done by a lot of people, including the example Kaspar gave now from 2 weeks to 2 minutes. It wasn't just COVID. There's been a lot of digital preparation work happening along the way. And one of the really exciting things that happened in Standard Bank about 2.5 years ago was the mental shift to stop thinking about branch as a different channel. You have to think about digital. And if you think about digital, then you must just expose digital everywhere. And you expose that same digital service into your branch. How a consultant interacts with the customer and helps the customer through the application is slightly different. But this shift from thinking, and I think it's your loan one's a fantastic example, is if you can get a loan on your phone in 2 minutes by taking a selfie and a picture of your identity, etc., is you can do the same thing in the branch, correct? And often people will answer and say, no, our branch system's different because that's supported by consultants. They'll ask you to fill a form in, etc. So for us, the big shift in this providing superior banking services has been to start to think channel agnostic. Think about the service, think about the open API, and then expose it anywhere, including branch. Hope that helps, Sajid.
Thank you. Shanky, my next question is for you. The role of technology at the interface between the bank and its customers has emerged as being more important today, with sales and marketing engine playing a key role in cross-sell and upsell with remote banking. What aspects will banks consider to get their act right to boost sales and growth? Do you believe the advances in AI, advanced analytics, and connected devices will have much influence in this space?
So, as especially in the sales and marketing side, we have consistently been making use of significant amounts of advanced analytics. We have started focusing far more on, targeted marketing and using what we know of the customer. And there are, of course, lots of challenges. One is the data privacy laws prevent us from using data the way we used to. Uh, but even then, we have a good amount of leeway in identifying the customer preferences and identifying what potential cross-sell and upsell opportunities there are. And RBL in particular, especially in the digital age where we've not been able to go door to door and do, push banking with handing out pamphlets or handing out entry packs, we have spent a lot of time doing upsell and cross sell using AI. And this has proved particularly effective for us. Not only that, we realize now that people are much more on digital channels than they were yesterday. So the number of people we can cross sell digitally has suddenly increased quite a bit. If you look at pre-pandemic, we used to say that about 20-25% of our customers are regularly online. Today, we say 80% of our customers are regularly online, and many because of entertainment and social reasons. And therefore, the ability for us to target these customers using social media, using entertainment channels, using digital engagement has become a lot better. So therefore, we also have learned rather quickly, I imagine, how to target these. And we use quite a few AI models to do it. We are also seeing a large amount of AI on fraud detection, on loan origination, where we try and identify whether the customer is either a good customer for a loan immediately or a bad customer for a loan immediately. So should I refuse him straight off? That also actually is a very important customer experience. If you apply and I tell you in 2 minutes that I'm sorry, I can't tell you, that is less irritating than if I take every possible document from you and then 2 weeks later tell you I'm so sorry, you are not an eligible loan. So we have gone both ways. We've done both the positives, approving of loans, and also the negatives, the quick rejection of loans. Firstly, we try and not offer him at all using analytics. And if we do offer him, we tend to try and say yes or no rather quickly. And this is really where, at the same time, we have been a bit cautious on AI because finally all banks have a very biased AI set. We have data on the people we have said yes to in the past. People we have said no to in the past, we don't have good data because we didn't give him a loan and we don't know how his behavior is. So our set is biased towards the successful applicants. And among those, whoever has frauded or not frauded is where our behavior lies. And there is therefore an implicit bias to our selection criteria itself. We are trying to figure out how to overcome that by taking external data sets, other people's data sets that are different from ours, where different people have either gotten loans that we have said no to or not gotten loans that we have said yes to. So that is a much more difficult exercise, and therefore we are very beyond the point of scaling this AI up. Because of this natural bias, we'll end up giving to people who we think is good in larger and larger numbers, to the point where inherently the system becomes very incestuous.
Thank you, Shanky. My next question is for Kaspar. Considering that the quality of better engagement is defined by the contextual and personalized interactions across the entire customer relationship cycle, what do you foresee as the path to engage with or converse better with customers at population scale? With Indonesia's vastly heterogenic demographics, how does Bank BRI, the largest bank in Indonesia, drive deeper engagement and converse better at population scale?
Thank you, Sanjit. We believe that we need to develop an easier access and wider opportunity for partnerships and ecosystems. We believe, I think, we have to success with ecosystem first and digital first strategy. How do we do it? So since 2018, we've already are the first company who got the license on open APIs, And also since then, we were the first bank who got the license on digital lending, end-to-end digitals, no more humans on the back ends. So with that being said, the way we do scale up is by massive amount and huge amount of B2B2C through our open API. We try to APIs all of our services, not only on digital savings, digital lending, and also on investments. So especially under crisis today, we're lucky. I think we've already got all those licenses 2018, and we've already got those, weapons, I must say, I think digital weapons since 2018, 2019. And by the time the crisis hits us on 2020, on March, we were the luckiest bank, I think, on earth at that time, because we've already prepared all of those weapons and, flourish from that particular technology, I think. And the second part, I think, we believe, we need to scale up through collaborations with them. So meaning we work together with the fintechs, we can generate and combine a better technology with them, boosting and accelerate financial inclusions throughout the nations. Following the success of BRI API in 2020, our digital lending product has been massively transformed into a API form factors. We're not talking about front ends as an apps anymore. That's perfectly welcomed. But also, in order to be able to scale up, we work together with some of the fintechs, some of the e-commerce, some of the ride hailing, some of the travel sites, everybody who owns that platforms, who owns the data. We provide our digital lending APIs together with them. We sell together with them. We don't care about the front ends. They do the front ends. They got the name. It's okay. But all of the back ends, the APIs, all of the originations, all of the disbursement, and also the collections, it coming back to the Ceria APIs. So this is what we call the B2B2C partnerships in the next levels of our scalarizations. And on the API sides, I think the way we accelerate the resilience of MSMEs in Indonesia, we follow what the strategy of governments providing stimulus to the industries. So we got the largest, I think, in Indonesia company who are able to provide and also transmit in a fashion of times by using all. I think we are the only bank on earth who own a satellite. So we are able to provide all internet connections, not only in a remote area of Indonesia. We have 17,000 islands all over these vast nations, but we are also able to provide with our agent banking, the financial services, all of throughout Indonesians' remote areas, and providing them with the stimulus from the government. So this is how we manage our business, especially in the time of crisis these days. So we dance along with the governments by the strategy, what we call business follow stimulus. And the second part, I think, please don't forget about the cybercrime. Cybercrime is one of the biggest threats, I think, in our nations and in the world as well. So since 2018, we were the first bank, I think, to keep pushing the international standard ISO 27001 until today. But recently in 2020, we were the company, I think, who got the only PADSS. PCI DSS is for card. PADSS is for application data security standard. And with that, hopefully we could tame and also we could contain and avoid some of the cybercrime and also some of the fraud that are attacking our nations and attacking our banks as well. And hopefully by doing that, we are able to ensuring our customer data security and also all the transaction security in a good manner, I think. Last but not least, I think the way we get deeper engagement and a massive amount of scales, I think, is through the APIs, open APIs, and also the last but not least is through the agent banking. So our agent banking is one of the biggest in Indonesia, and last year we finally scored 1,000 trillion rupiah. So it's around about 100 billion rupiah in sales volume. That is the biggest for the past 3 years. So we are able to hit that because of our BRI brain helping us to appoint a new agents with a return of investment in less than 45 days. We are able to do that because of the combinations of open API, AIs, and also governance. So that would be, I think, our answer from Barakat, Indonesia. Back to you, Sanjit.
Thank you, Kaspar. Adrian, my next question for you. The pandemic has forced banks to rethink and adapt to many challenges. Remote working practices, and especially so in realigning their strategies in the branch banking space. In this context, can you share your views on important considerations and particularly how your bank has enabled your customers navigate through this challenge? Also, what's your bank's approach for branches in future?
Thanks, Sajid. And I think, as Sankey also said in the beginning, is, we're sitting now nearly a year later. Initial in South Africa, as an example, lockdown happened full hard lockdown happened in the third week of March and 2020. So we're nearly a year into it. And it's become so much of the normal now, although it is still the unnormal. And the journey, I think although the journey has been incredibly accelerated and we've achieved things in weeks which would normally have taken years, I do think that the first requirement was to take care of our staff. And that obviously, again, based on foundational work that has been done over time. I don't think it happened immediately. It was good foundational work, but within weeks, well, we didn't have weeks. We had 3 days of notice from our president that we were going into hard lockdown. We were able to achieve a point where even today still, and we're back in some phase 2 level, second wave lockdowns, 75% of our staff today are working effectively from home. 75%. And there are obviously certain roles which require people to be at work, such as in the branches, etc., such as delivering cash to ATMs. So one can't expect to have 100% of our staff working from home, but 75% of our staff today are working effectively from home, fully doing their role from home. So taking care of our staff was really important initially. And almost in parallel, and Sankey spoke to it a little bit about, you have to take care of your clients, and there's a lot of pressure. And Standard Bank was the first one to introduce the payment moratorium, and for certain of our clients like students, etc., even interest rate moratoriums. And we gave it to everybody. Just because it was the right thing to do, but also if you create opt-in scenarios, then you just clog all of your channels and your customer experience is really difficult. But I think the most exciting things were then what followed. Once one had the basics in place, what followed were, and again, Kaspar spoke a lot about it, how do we help our customers to help their customers? And that was the really exciting piece. So we had deep connections into China. We're 20% owned by China. How could we help government and other healthcare institutes get access to PPE, so personal protective equipment? We had the supply chain, we had the buyers, and we've been using them for our corporate clients and for our commercial clients, and we opened this up to everybody. And actually, in a very short time, the bank became one of the biggest suppliers or facilitators of supply of PPE because we had the chain. Then we'd had to obviously quickly put in some kind of screening for people coming into our branches. And there were legal requirements: take temperature, take a picture of the national ID, etc., etc. And we implemented that at the front door of all of our branches. And we said, but let's give that to all of our customers. So we gave it to all of our customers for free so that they could also have some kind of screening method to protect both their staff and their customers, etc. So this ability to take tools which were available to the bank and to open them up to our customers to serve their customers, this real B2B to C, I think was probably one of the most exciting because of the rate at which it scaled. It exploded. When you do B2B to C, you just have so many other people distributing on your behalf. So I really think that that was some of the secondary effects. You know, the primary effects of take care of your staff and take care of your customers in the simplest way, but then how the secondary effects happened was incredibly exciting. You ask a little bit about branches. I think that our branches have continually been resizing and we've been rescaling for years as our digital journey has grown. You know, I remember in 2014 in Africa that outside of South Africa, 71% of everything our customers did was outside of the branch. Now we're at a stage where it's about 94% by volume of everything that our customers does is outside of the branch. And that's been a conscious decision. In the meantime, we've more than doubled the size of our customer base in those 5 years. So, you know, it's a conscious decision. You have to manage branch in parallel to managing digital. You can't take your eye off branch and have this massively scaling digital journey and suddenly you say, oh dear, I've got a branch network. What should I do with that? You have to manage these in hand. And that's been something really successful for us.
Thank you, Adrian. Very, very, very interesting insight. Thank you. My next question is for you. Your favorite business initiative, right? APIs and open bankings are fast finding relevance in the digital banking and new business models are evolving. How do you see banking and the banking experience evolve in this context over the next few years? How is your bank driving innovation in this space?
So I must say I'm impressed with what Indonesia has done. We thought that we were thinking it all up and that nobody else knew about it. But I'm embarrassed to say we seem to be behind Indonesia. We actually have a very similar thought to what Kaspar has outlined. Our thinking is that increasingly the interface to banking will not necessarily be our own. Even today, you know, if you look at we are one of the largest digital transaction processors in India, you know, because we have consciously taken a digital first strategy. RBL Bank is quite disproportionate in terms of balance sheet size in the number of digital transactions we process. And because that has been our way to success, we haven't been able to launch branches and compete with the branch-centric world of the larger Indian banks. So we've consciously taken a digital road to success. And we've seen increasingly that most digital transactions don't come through our front ends. And therefore, banking as a service and the standardization of APIs, the real-time onboarding, not having host-to-host connections that require weeks of work with IT, these have all become critical requirements from all these partners that want to onboard with us. And we are continuously progressing on that front. But we see two other challenges that we have to rethink. Banking, our traditional banking SOPs, our infrastructure, our investments, the way our technology choices have happened in the past are all geared to complex transactions, but not high throughput. Whereas increasingly, the new digital transaction is a very straightforward, simple transaction, but in humongous throughput. They want reasonably fast latency. We have estimated that they want it at less than 300-400 milliseconds. And because that's what the world of Google and Facebook offer them, they want 5 nines reliability. There is no question of downtime for them. They are all 24/7 businesses. They are all businesses that do real-time reconciliation. So even a small outage starts worrying them. And they want humongous throughput, 10, 20,000 transactions a second, which is far beyond what the old world of banking used to be. In India, till recently, banks used to be maybe 20 TPS. A few banks would be 100 TPS based on humongous hardware. Now we are talking about putting it on lightweight hardware at tens of thousands of TPS, because we are talking about simple transactions. And the shift from complex transactions, low throughput, lots of checks and verifications, to high throughput, simple transactions, and therefore very few gates to go through. This is a large shift for us, and we are rethinking our entire API stack in the process. It's not just a question of saying we will change the front end or the interface or the API layer. We are rethinking even our mobile strategy. We are thinking in 2 or 3 different ways. We don't think customers anyway have this siloed strategy that they do internet banking, or they do mobile banking, or they do chat, or they do WhatsApp. Now they do a kind of mix and match of them. They may start a complaint on Twitter and expect to continue it on mobile banking. Those things most banks don't allow today. Today, banks are, if in fact, most banks have separate logins for mobile banking and internet banking. Many banks have implemented different onboarding procedures. And again, at least in India, they have. In fact, even today in India, some banks have physical onboarding procedures for digital channels. They need to go to a branch and sign. We don't have it, but many banks in India do. We're having to rethink all this. We're having to rethink what digital first really means. If someone can complain on Twitter, our challenge is we generally tell him, yes, we have heard your complaint. Now complain through formal channels so that we can continue the conversation, which most customers don't like very much. They think of it as inconvenient at best and avoidance of the issue at worst. So they complain about how this kind of response is they are not happy with. What we want to ideally do is, again, go into the world of fintechs where you complain on Twitter. That complaint can be taken up directly and addressed on other channels without them having to resubmit the complaint on some known channel. Also, partially, they start a conversation on WhatsApp. They should be able to continue the conversation on phone. And the phone guy should know what they last spoke on in WhatsApp to some other agent. Those challenges are what we call unified digital customer experience. Today, our customer experience is heavily call center centric, and we are having to rethink this quite a bit. The outer edge of this is what we call conversational interfaces. Chat interface, voice interface, Google or Alexa interfaces. In India, Google is particularly popular. My security guard uses Google to see videos on his phone. It's quite amazing, because I used to think that only people like us with fancy phones use Google Voice. But it turns out my security guard, whose hand is always occupied by something or the other, finds it extremely convenient to use Google Voice. And so those conversational interfaces, we have to rethink our strategy around. Today, our strategy is very heavily call center voice centric or application centric. Even in the chat, we tend to focus you back into the application. And so these are the revolutions that we have to do. We have to undo our entire stack and rewrite it to be in the simple, high volume, really fast transaction space. And we have to rethink how we interact with customers. Direct customers, indirect customers, how do we interact with them? Through all these new digital channels. Of course, we are not doing parlor, I can tell you that.
Thank you, Shanky. Insightful as always. With that, we are almost upon time. Before we close, I would like to ask each one of you to share one digital innovation story or initiative each very quickly, maybe 60 seconds to 2 minutes, either at your bank or elsewhere, which made a mark in your opinion in helping drive engagements and growth. What key learnings would you like to share for the banks aspiring to drive such innovation in their organizations? Kaspar, can we start with you?
Sure. Thank you, Sajid. I'd like to start, I think, through our digital transformation strategy for the past 3 years. Bank Rakyat Indonesia managed to accelerate the loan disbursement time from previously, before 2018, it was 2 weeks in prior to 2018, to 2 days in 2018. And by the help of digitalizations, we are able to accelerate it in 100x with 2 of digital lending products that we've created together with, of course, with the help of Finacles. We've got Pinang and Ceria. Now it only took 2 minutes. So all of our customers before the pandemic are able to experience borrowing money in just less than 2 minutes, scanning their face, scanning their IDs, no longer has to do the manual manual signature. Instead of using the digital signatures, they are able now to just, they don't even have to go to the office of our bank anymore. Just download the app, scan their face, scan the ID, that's it. Money disbursed in less than 2 minutes. So this is, I think, one of our blessed before the pandemics. And after the pandemics, it becomes massive, I think. It's a massive amount of profit, a massive amount of opportunity for us. And now we share that profit and we share that APIs. So all of our platforms, ride-hailing platforms, e-commerce platforms, fintech platforms are able to experience the same way that we've already got from 2019 to onwards in 2021, especially these years, I think. So this is how we open sourced our technology to the fintech community and to the other ecosystems prior to our Indonesian market. And the second one is to our BRI APIs. It opens up a massive amount of opportunities for third-party platforms to tap into our BRI customers as well. Reduce the time to get access that enables our partners to integrate with Bank Rakyat Indonesia. From previously it took about 2 months, lots of hustle and dazzles, lots of documents. Now it's just less than 2 hours. They just log into our developers.bri.co ID and they registered, got the key and tokens, that's it. Follow through on the sandbox, they got to the production is in less than 2 hours, I think. So this is, I think, one of the blessed transformations that we've got, not only for our banks, the mindset of our employees. Previously, nobody knows talking about APIs, Sanjit. So in 2017, nobody, like branch offices, we've got the largest branch office in Indonesia. We've got almost close to 500 branch office, close to 11,000 office all over Indonesia. No one speaks API. But now everybody speaks API and we've got massive amount of transactions I've already mentioned to you. And our agent banking is really, really helpful by the amount of APIs that we've also shared to our partners using the agent banking as well. So our key learning for the past 3 years of our digital transformations was twofold. We run in bimodal mode, meaning we have 2 separate teams running simultaneously. One team focused on explorations, the another focused on exploitations. So we cannot expect the same team to do explorations and at the same time, the same teams also focus on exploitations. So we've got separate teams to doing that. And I think that is one of our key learning for the past 3 years, the success of our digital transformations. And last but not least, I think in this time of crisis recovery, we believe the best defense is a good offense. The best defense is a good offense. Learning and evolving might seem the safest option in time of crisis, but in Bank Rakyat Indonesia, we believe that we have to be the first, the movers, and crises often present opportunities for us to grow even more. I think that will be all from ourselves. Thank you so much for the opportunity. All the best for Infosys, Standard Banks, and also RBL. Thank you.
Thank you, Kaspar. Adrian, your take on this topic?
Yeah, thanks, Sajid. And I want to use a quick one from during COVID, because I'm going to set the scene. We've got a solution that's working where we've never met the partner who's helping us provide the solution, apart from on the screen like this. We've never physically met. We've never physically met any of our customers. And we built a solution and deployed it, and it's had a marked impact. So let me explain very briefly what happened. Is during lockdown, the supply chain for fresh fruit and vegetables was largely broken. And what one had was farmers with crops that were maturing, but the central marketplace for bulk, for large bulk, was closed. And then you had retailers looking for stock, and you had millions of starving people. Now, you must remember that many children were now excluded from going to school, and they'd been on school feeding schemes where they got fed at school. So what we were able to do, and you say, but this is really being more than a bank, is with partners very quickly put together a platform where a marketplace where farmers could advertise their bulk products. This is not about individual products. This is about bulk products. I have a ton of potatoes, and we could match it with aid organizations that were looking for food for millions of starving people. We did this during COVID in a matter of weeks without ever physically meeting any of the people. And I think in the first month or two, the platform moved 100 tons of food between suppliers and hungry people or aid organizations. So just a great example of what can be done when there's pressure and you think about doing it with APIs, with partners, etc. Thanks very much, Sajid, Kaspar, and Sanki. I think it's been such a great session. I really enjoyed it.
Thank you, Adrian. Thank you very much. Sanki, your take on this?
So the most interesting innovation that I have come across that we did was using facial recognition in a very low quality environment to do identification of customers and do logins of employees. You know, our challenge was facial recognition works pretty well if your image is high quality and if you have a large training set. It works very badly if you're, you know, in the COVID times, we could not ask people to come and submit high quality photographs or stand in front of a good quality camera. It was what it was. Lighting was bad, you know, and people were not necessarily visible properly in that. But we realized that AI had come to the point where even under these conditions, we are able to do fairly good quality facial recognition to a high level of confidence. And then many activities could therefore be enabled. You know, it wasn't that you were able to do it with 100% confidence, but you got to in excess of 80%. And therefore many activities supported by a simple external, maybe an extra OTP or something, could be used to progress it. And your fraud risk would go dramatically down. And in fact, we worked even with NPCI, the payment hub, to use this similar technology with them as well. It is a very interesting, very lightweight, very quick deployment use of facial technology on the basically using cloud-based libraries that already have a large database of known faces. And this I thought was an interesting innovation, primarily because it takes into consideration all the limitations we have in this new restricted, you know, as Kaspar is saying, or as this thing is saying, that the world where we don't meet our customers, where we can't tell them to come to branches and do certain things, where we can't even ask them to courier a high resolution image. And we can do that at scale because we don't have any retraining costs. So that was a very interesting innovation, I thought, which we can easily replicate on a much wider scale. And we are indeed, in fact, replicating it on a much wider scale. So thank you, everyone, for having me on this call. I really enjoyed this session. And I really enjoyed hearing what Indonesia and South Africa have done. It unfortunately means I have to pep up my pants a bit more and next time be more impressive. But yeah, I really enjoyed the sessions.
Thank you. With that, we come to the end of what's been a stimulating discussion. Thank you, panelists. We are very grateful for the time and the valuable insights you've been able to share. And thank you all for the attendees for making time to attend. I do hope the session was useful and there was much you could take away from these discussions. Do feel free to come back to view the recording. I hope you will stay tuned to Finacle Conclave. There are a number of high quality speakers and discussions lined up for you. Look out for the mail from our team for more details and check out the agenda and the event website for more details. Goodbye and stay safe.